Hello, everyone. Welcome to Forte Financial Mortgage Group's podcast. We have a very, very exciting day today. We have just rolled out a brand new 0% down, 100% financing program for first-time homebuyers. What is very unique about this program is that it is actually a 3% down program for a first-time buyer. The definition of that with regard to this program is someone who has not owned a home for the past 3 years. You are considered a first-time home buyer. It is a 3% down program, so we're giving you a 97% a loan, 97% of the purchase price, and the other 3% we're giving to you as a forgivable second mortgage with no payment and no interest accrual. The amazing thing about this program that we're offering, this is very unique to Forte Financial, is that there are a few ways to do this, but one of the ways is that there is no maximum income. There's no income limit. So if you make $1 million a year, you would still qualify for the 3% forgivable second. This is incredible because if you look at a lot of the down payment assistance programs that are out there, the ones that have a forgivable second, most of them are very, very, restrictive in terms of income, debt to income ratios, very, very difficult to get. And what we found is with those programs, probably 19 out of 20 borrowers would not meet the requirements. So the only real requirement, that we have is that you have to be a first-time home buyer. So your income is fine. We follow a couple of traditional, conventional underwriting requirement guidelines where, you have to get through our underwriting system, but this allows you to have higher debt to income ratios than your typical restrictive programs. We'll go up to 50% on our debt ratio under this program specifically. It is conventional. This is not an FHA program where you have a 1 3/4% upfront mortgage insurance that's being financed into the loan. There is no interest accrued. There is no payment on the second mortgage. So you're literally getting 3% from Forte Financial for nothing. That is forgivable if you keep this loan. So couple of hot points here. So let's just give a specific example here. Let's say you have a $500,000 purchase price. You're going to put 3% down. It's technically a 3% down program. So now you're borrowing, you're getting a loan for $485,000. The other $15,000 we are giving you as a second mortgage with no payment and no interest accrued. If you do pay the loan off early, you refinance the loan, or you sell the house, that is due back. There's no interest that's added to it. There's no penalties. It's just due back. So that you will have to pay back. One of the coolest things that I'm the most excited about with this is when it comes to refinancing. First off, a lot of our viewers and customers that know one of the things that Forte Financial we specialize in is our FFF free refinance program, where we actually give the borrower a lender credit to pay for closing costs. A lot of you are probably saying, oh, well, we're not going to qualify for that if we have this because we also have to pay off the second mortgage. If you refinance this loan with Forte Financial and rates come down, this is the most beautiful part. We will subordinate that 3%, that $15,000 in this example of a $500 purchase price. We will subordinate that. So we will refinance that $485 or whatever that goes down, whatever it is, $484, $480, whatever it is. We will refinance that for you and resubordinate and add that second back on like it was. So you don't have to pay that off, and you don't have a payment, and you don't have a penalty, yet you still get the benefit of refinancing when rates come down. It really is the best of both worlds. It's very, very exciting. If you're a first-time home buyer looking to buy a home, but you don't have the down payment, or maybe you have the down payment, but why not? If you can get it for free, why would you use your money? Put that money towards something else. Pay off some credit cards. Save it for some renovations that you want to do to the new home. This is so exciting. It's such a great program. It for qualification purposes, it does follow some of our conventional Freddie Mac guidelines as far as underwriting is concerned. However, again, here are the big points here. There's no income limit. You are not restricted to how much money you make. If you are under the certain AMI limits, as we refer, there are benefits to the rate on that first mortgage. Yes, you will save more, but it doesn't exclude you because you make too much. There's a few ways to do it. So if you are interested in getting pre-qualified for our 0% forgivable second mortgage program, give us a call at Forte Financial. You can reach us at 475-215-5401. You can apply online. Head to our website, fortefinancial.com, to submit your application. Or you can send us an email too, info@fortefinancial.com. Check out our YouTube videos, other podcasts, other social media content. We have a whole library on our website of education for first-time buyers and many other topics for existing homeowners. So get in touch with us. This is super exciting. We just rolled this out yesterday. It's May 16th, 2024. We just rolled this out. So a couple of the things that I want to talk about today. Something that is coming down the pike that's completely unrelated to the first-time buyers. Freddie Mac Second Mortgage Relief Program. You're probably hearing a little bit about this in the news. I'm going to speak a little bit about what the details are going to be because they're not all out. But the long and short of it is there's about $2 trillion in equity that existing Freddie Mac mortgage holders have in their homes right now that is just is trapped in a way where they have a very low mortgage rate on their first mortgage. Somebody who got a loan in 2019, 2021, right around COVID when mortgage rates were, as low as, in the twos. We have some customers in 2021, we gave fixed rates in the ones. Yes, that's correct. So anyone that has a loan like that is absolutely not going to want to touch it, refinance it just to pull some cash out, pull some equity out to pay down maybe some other credit card debts or to do home improvements. They don't want to lose that, call it a 3% rate and get a rate that's now in, let's call a 6.5% rate to take out a small amount. So this Freddie Mac proposed program, which is not official yet, everybody that I've spoken to, and we believe that this is going to get passed. The deadline, I believe, is May 22nd or 24th for proposed adjustments, and then there's a 30-day review period that is the max. So really, by around towards the end of June, it has to be either approved or denied, and everyone thinks it's going to be approved. So what it's going to do is it's going to enable people to take out fixed rate second mortgages on their house without touching their first at very good terms. Granted, I don't expect the rates to be as good as current first mortgage rates. Like I say, current first mortgage rate, for us, our average rates right now, 30-year fixed that we've been locking people in this week are, in the sixes right now. And we're expecting the second mortgage rates to at least be a full 1% above that. I don't know yet, but that is our best estimate at this point. So figure something in the mid sevens, maybe 8%. So that's an amazing opportunity for someone who's going to be able to pull that equity out. However, we are actually doing a ton of home equity lines of credit right now for consumers who are looking to pay off credit card debt, do home improvements without touching their first mortgage. We're actually going up to 90% of the value of the home under one particular program where there is usually no appraisal. The process from application to closing is as little as 10 days. I mean, I actually closed one faster than that, but I'll just say 10 days is a realistic time frame with cooperation. To 2 weeks is really how long it's taking for people to close. The closing costs are definitely on the minimal side, and we're getting it done fast and easy. So let's talk about, well, why wouldn't everyone just do the HELOC now instead of wait for this Freddie Mac second mortgage program? And again, we don't know all the details yet of Freddie Mac because it hasn't been issued yet. However, the few things we know that are in there, first and foremost, it's going to only go up to 80% maximum of the current value of the home. 80%. That's number one. Freddie Mac must own the first mortgage. It must be a Freddie Mac conventional mortgage that they have for a first mortgage in order to qualify for this special program. So it is going to eliminate a lot of loans. A lot of loans, are not Freddie Mac loans. There could be Fannie Mae, a portfolio, which is, completely not, a government-sponsored entity loan, or it could be a government loan like FHA, VA, USDA. Those are not going to be eligible for this Freddie Mac second mortgage relief program. So for those people, the HELOC is still an amazing option because there is no restriction with the HELOC program that you can get this. So I think that if you're looking to do something, the HELOC program, I think, gives a lot more flexibility personally, because with a HELOC versus a fixed rate second, and this comes up a lot. So let's discuss pros and cons of a HELOC versus a fixed rate second mortgage. So personally, I prefer a HELOC. And the reason I prefer a HELOC is twofold. One, it's an interest-only payment that allows you, there's a draw period, anywhere between 3 and 10 years, depending on the program. There's a draw period of 3 to 10 years where it's just like a credit card in that case, where you can, let's say it's a $100,000 HELOC. You close, you take out $50,000 when you close, okay? You're now paying interest only on that $50,000. However, you can pay it all off and just keep the line open and have no payment, or you can pay off half of it. And when you do that, your payment adjusts. Your payment goes down. Whereas if this was a fixed rate second mortgage that you took out for $50,000 and you paid down $25,000 of it, your payment doesn't change. Your amortization schedule doesn't change. All it changes is how fast you pay that off. Obviously, you're going to pay it off much faster by paying half of it down, but your minimum required payment is still that initial amount. So that's definitely a drawback. In this particular environment, I truly believe the HELOC is a better deal as well, because right now, for the most part, all HELOCs are based on prime rate, okay? Prime rate right now, as of May 17th, and we're filming this, 2024, is at 8.5%. So HELOCs are based on prime rate for life, prime rate plus a percent or whatever it is, or prime rate minus. There's definitely a whole different variety of HELOCs. When the Fed cuts rates or when they raise rates, they're referring to the Fed funds rate, which is the rate at which banks basically transfer money to each other, but it also controls prime rate. If the Fed cuts rates 0.5%, which it is widely expected, especially after the CPI report that was issued this week, it is definitely widely expected that is going to happen towards the end of this year. Of course, we're also in an election year. Typically, these are the types of things that happen as we get closer to the election. So we believe the rate's going to get cut. Point being, if you have an 8.5% HELOC rate and rates go down 0.5% in terms of the Fed funds rate, your HELOC rate now went from 8.5 to 8. Okay, and there's a lot of forecasting out there that the Fed funds rate will go down 2 to 3% over the next couple of years. I am also in that camp. I believe that that's going to happen as well, based on economic indicators. And, you look at consumer savings is at its lowest point that it's been since before COVID, with credit card debt through the roof, buy now, pay later, defaults. Everything is going in a direction that the economy is going to need some relief, and that relief will come with rate cuts. So the point being, if you get yourself a one of these special Freddie Mac second mortgages, let's say the rate you got is 8%. Okay, I don't know what the rates are going to be. Just estimating at this point, they're going to be about 1% or so higher than first mortgage rates. So let's say you got that. You get that now, and the Fed cuts rates, your rate stays at 8%. you have to refinance out of that loan, okay? If you got a HELOC and your rate was at 8.5%, now you're already down to 8. Fed cuts rates another quarter, half. Let's say it cut another half. Now that rate goes down to 7.5%. Your rate goes down another 0.5%. So, feasibly within a year, your HELOC rate, which was higher than what the fixed rate would have been on the second mortgage, is now lower. Plus it's interest only. Plus if you pay down $10,000, $20,000 of whatever the outstanding amount is, your payment goes down. So, then also let's say you paid off a year from now, okay? You paid off a year from now, and then 2 years later, oh my God, I need $50,000 to do a renovation, or I have all these debts. You have that money right there. You just write a check out of your HELOC. You cannot do that with a fixed second mortgage. You have to go refinance it, try to get another loan. So these are just some of the pros and cons of HELOCs. The other thing is the HELOC is available right now. It's available right now. We're doing so much of this right now. This is one of the most incredible things that we're offering right now is this HELOC program, because it's fast, it's easy, and it's a great alternative to, obviously, to pay off credit card debt, to if there are home improvements you're looking to do, any way you're looking to access capital. A lot of Americans right now are trying to save any way they can. If you have installment credit card, other debt, let's say it's $50,000 worth, and your interest rate on that is anywhere between 15 and 20%. It's a no-brainer to take out a HELOC. Even if that HELOC rate is in the 9s or 10%, you're saving a ton of money. So if you're interested, you're struggling, you have equity in your home, you want to see what that looks like, reach out. ForteFinancial.com is the easiest way to get in touch with us. You can send us an email, you can message us, you can give us a call, 475-215-5401, and one of our loan officers would love to speak to you about it. Are you tired of applying for a loan and then immediately after the lender pulls your credit, you are getting bombarded with solicitations from other lenders? This is something that has gotten dramatically worse. Let's talk about why that's happening and what you can do to stop it. Yes, you can stop that. So first of all, your lender is not selling your information, okay? When you get your credit report pulled, the three bureaus, TransUnion, Experian, Equifax, this information is public. This is public information that you're shopping. So this is actually sold to other lenders looking for leads. They know, hey, a mortgage company just pulled your credit. They're going to be all over you saying, hey, looks like you're looking for a mortgage. I'm sure we can do better than you were offered. And we get this all the time from customers. So what's the reason is because you're not on the do not call list, if you want to call it, or the opt out. So basically all you have to do is go on this website. It is optoutprescreen.com. OPTOUT prescreen. So OPTOUTPRESCREEN.com. Optoutprescreen.com. You fill out your information, submit it, and it protects you for 5 years. It does take about 5 business days for it to take effect. So if you go on, you complete this, you're going to want to wait. I would give it a week before somebody pulls your credit, before you don't have to worry about being solicited. Now, one of the great things that we do at Forte Financial is for our buyers and our customers is we'll just do a soft pull. If we do a soft pull, first of all, it doesn't count as an inquiry in your report, and it doesn't flag anyone that your credit report was pulled. So you won't get a solicitation. So typically what we do is, first off, we do a soft pull before we do anything. And assuming the borrower wants to move forward, we'll have that discussion with them. We'll say, hey, are you, by any chance, have you opted out of solicitations? Most customers, I'm not gonna say most, it's a good mix. A lot have and a lot haven't. But we can do that for our customers, complete this process for them with their permission, certainly, and help them with that. So just protect yourself. If you're thinking about going to get a loan, it's not just a mortgage. This could be for anything: credit cards, installment loans, car loans. If you're going to get doing any of this stuff, and the creditor lender is doing a hard credit pull, and you don't want to be solicited, make sure you go to optoutprescreen.com, fill out your information. Again, takes at least 5 business days to take full effect so that when somebody does pull your credit, you don't get crushed with calls. It's been insane. I have customers calling, going nuts, that, I've been getting all these calls, and it happens. It's not us. It's not whatever lender you've talked to. They're allowed to sell that information until you've opted out. So make sure you opt out if you don't want to be harassed. You think it's too early to refinance your mortgage? You think rates are still too high? Not at Forte Financial. We are actually refinancing clients right now already. One of the very, very unique things that we're doing here at Forte Financial is our triple F, Forte Financial Free Refinance program, where we actually give a lender credit that pays for the borrower's closing costs. And, typically the rate at which we're doing that at is the same or lower than our competitors' rates in terms where they're charging thousands of dollars in actual loan closing costs. So a perfect example, a loan that we just closed this past couple weeks, I think it was the end of April, we closed it. The borrower had gotten a loan a few months ago. Oh, by the way, you don't have to be in your loan. If you got a loan from a bank or somewhere else, you can give us a call. It could be the day after you closed. Okay, there is no time, unless you have an actual prepayment penalty. So borrower got a loan a few months ago from a local bank. Rate was a little bit over 7%. I think it was 7 1/8 or 7 1/4 maybe. They got on a 30-year fixed rate. Paid lots of closing costs for it. We gave them a refinance. This particular loan, now this is not an offer. This was not an advertisement, because this is an example of a loan that we just closed. Okay, rates and terms change every day. They go up and down. So just understand there's a very good idea of something we can do. We got the borrower, closed them, gave them a rate of 6.599 and paid for all of their closing costs. They didn't pay 1 cent in closing costs. Okay, not 1 cent. Free. We gave them a full lender credit, which covered the attorney title charges, all the recording fees, and all of our underwriting, credit report, bank fees, appraisal, everything. Covered everything. So they paid nothing. They went from 7 1/4 down to 6.599, and we got rid of their PMI because they were paying PMI as well. So they saved about $450 a month, and it cost them nothing to do, and they just got their loan a few months ago. So there's a lot of creative things we're doing here that are completely different than our competitors. No, there's no catch. There is no catch. Our biggest problem is the lack of belief that everyone thinks that there's a catch and they're losing something, and there's not. There is no catch. If you want to look at some of our previous podcasts, we had attorney Anthony Iorio on here a few months ago discussing this. He is not an affiliated member. We do not have any partnership or affiliation. He just happens to be an attorney that we have worked a lot with on these refinances, who has referred us a lot of clients that we've worked with and given this free refinance for, and has confirmed as well. So if you got a mortgage any time in the last year, okay, I'm going to say in the last year, so it's May 2024. If you got a mortgage between around this time last year through now, and your rate was above 7% or higher, you should reach out. You should absolutely reach out. Send us a copy of your mortgage. This is what we do. We're not going to harass you. We're not going to take a full application. We're not going to make you go through the whole process. What we ask is you send us a copy of your current mortgage statement. Okay. We will do our own due diligence. We may ask a couple quick questions like, hey, how's your credit? What's your primary goal? Is it just to get the rate and payment down, or whatever it is? And we'll make a couple assumptions. We'll say, hey, assuming your credit score is X, assuming the value of your home is Y, and assuming your debt to income ratio is B, then here is exactly what we would be able to do based on that criteria with today's rates. And if you like that, great. Then you complete the quick and easy 5-minute online application. We give you a list of the paperwork you need. You e-sign everything, you upload the documents to our secure portal or get them to us in any other manner that you want. And that's it. We close in about 2 weeks on average. So very fast and easy. We are not salespeople that are going to pressure you. You want to get a free analysis. And the first thing is we don't want you to go through a whole application and pull your credit and go through a whole, process like that if it doesn't make sense. When, we can dissect this in 30 seconds, maybe 5 minutes. I'll know if this is going to possibly make sense or not. And then I start working on the numbers or not me or my team. We'll start working on the numbers and let you know, hey, this is what it's going to look like and give your honest thoughts. So reach out. If you got a mortgage in the last year, your rate is 7% or higher, you need to reach out. There's no cost for us to take a look at this. You don't have to apply online. You don't have to submit all your paperwork. All we need is a mortgage statement. That's it. We don't waste your time. We don't want you to waste ours either if it doesn't make sense. It doesn't make sense for anyone to get into it. So info@fortefinancial.com. You can email us. Go onto our website, fortefinancial.com. You'll see our triple F no cost refi. You'll see that in the menu, and you can actually submit your information through there as well. Or you can give one of our loan officers a call today at 475-215-5401 for more information on our free refinance program.